All right, guys. Matt Lengel here with Denver Private Wealth Management. Really quickly, I just want to give a little bit of insight within a couple slides as to what we've been seeing lately in the stock market in September. So we've seen a little bit of a sell-off, and these slides are meant to just be a really concise, 5-minute chance to get a little more information as to what we're seeing and maybe why some of that sell-off occurred. So, to start, I want to talk about the S&P 500. So, quickly, taking a step back, indexes and ETFs as a whole have become incredibly popular as a way for investors to, invest in broadly diversified baskets of stocks and securities. And as a whole, I think it's been incredibly valuable for investors to have that opportunity to do so. But sometimes we forget what the actual stocks and investments are within those indexes. And so the S&P 500 being, the most popular index of them all, when we look underneath the hood, the S&P 500 is supposed to be indicative of what's going on in the U.S. economy as a whole. So it's going to be 500 of the largest U.S.-based stocks. Maybe not the absolute 500 largest, but some of the larger U.S.-based companies that round out every part of the U.S. economy. But what's been interesting is since 2016 is there's really been this huge run-up of really just 5 stocks of those 500 that have really been buoying the other 495. And so those 5 stocks are the S&P 5, as they're starting to be called, is Amazon, Apple, Facebook, Google, and Microsoft. And so we start to see the split that's represented here by the white line of the 5 stocks, specifically also the rebound that occurred in 2020 of those 5 stocks just roaring back and really buoying up the other 495. So we saw those other 495 stocks didn't really participate in that rebound that happened back in 2020. And so when we look as to what's happening, recently with a little bit of the market sell-off and the S&P 500 coming back down to earth, the question starts to become, well, was it really that the S&P 500 was coming back down to earth, or is it that the S&P 5 finally just started to run out of a little bit of momentum? And so, looking at this chart here, price to earnings is a great way to be able to analyze valuation. So just like you wouldn't overpay for a car, PE, PE ratio, or looking at forward-looking earnings, is a great way for us to sort of unlock the pricing and the valuation of certain investments. And so those 5 stocks we talked about, Facebook, Apple, Amazon, Microsoft, and Google, are trading at almost double the other 495 companies, and that the S&P 5 is represented here by this dark blue, and the other 495 are in the light blue here. And if we look back to 2000, the tech bubble, we saw a similar run up of at huge levels of over 50 times forward earnings on these 5 companies. And eventually they're going to have to come back down to earth. Now, I'm not saying that we're in the middle of a tech bubble by any stretch, but at the same time, you just need to ask yourself, how much room can these things really run? If Apple's up over 60% year to date, do we really think it's going to do 120 year to date? Probably not. And so it's not necessarily that we think that these 5 stocks are going to fail, but they're just running out of a little bit of steam. They've just done such an amazing job over the last 6 months, but because they make up such a large part of the S&P 500 and the U.S. economy as a whole, as they go a little bit, the rest of the S&P 500 are going to go, and so that's really what we've been seeing. Now, I don't want to make this completely a tech conversation, but so I think it's worth noting seasonality a little bit. So if we look at this black line here and seasonal patterns of when the stock market goes up or down, September's a little bit of a dull month to begin with. We just came off summer, earnings aren't quite out yet. It's not really a time that we're going to be seeing huge positive performance if I'm looking year over year. So, and towards the end of the year, we'll usually see a little bit more of a dip back up when you start thinking about people repositioning their accounts, buying more equity or more stock, things of that nature. So I think it's a little bit of a couple different storylines. Like most things, it's never one thing, but when you factor in the seasonality, the time that we're in right now, September, along with what big players those 5 stocks are in terms of the overall U.S.-based economy and U.S.-based stock market, that's sort of what we're seeing a little bit in this market pullback that we've experienced over the last couple of weeks. So I hope this helped. Please feel free to reach out and ask questions. We'd always love to talk further. These are just a couple slides. We can always do a deeper dive with you and make sure that we're answering all your questions and making you guys feel good about your investments and how you're positioned for the future. Thank you.